All right, day 489 going live in a row. Today, we're going to look at how to add a list, how to build a list of comparable sales properties for your BRRRR strategy. And today, let's start with just looking at properties that are coming onto the market. As you can see right now, I'm filtered on single family homes that are 4-bedroom plus in Redfin, single family homes, and properties that have been on the market for less than 3 days. And the reason I want to do this is because I'm closely tracking what is happening to the 10-year treasury yield. Okay. Now, if you understand how and what home prices are affected by, they are affected by obviously mortgage rates is a big factor. And we'll talk a little bit in a little bit about why that's such a big factor. But as you can see, 30-year mortgage interest rates are typically affected by the interest rate on the 10-year treasury yield. And if you understand this, right, you can see right now that the interest rate is about 4.512, which is near its 12-month high of roughly 4.8. You can see that it reaches low about 3.6-ish in the middle of September and October. So if you understand how the BRRRR strategy works, right, it's heavily dependent on you getting ARV correctly. So if you were, let's say, refinancing a loan today, you might be looking at properties that were sold in September, October, which because of the lower interest rates, the prices of those homes that were sold might be higher. But if you're buying properties today and now you're going to try to refinance in 3-6 months from now, that might cause you to look at prices that are being sold and being closed for today. And that's why we're tracking what's happening to the market on a daily basis, just looking at one property every single day on what's happening with the purchase prices. Because, right, on top of what's been happening with the 10-year treasury yield, right, it's obviously affected by the sentiment of the Federal Reserve, what bond traders are anticipating the Fed is going to do, but it's also affected by the spread, right? The spread historically has been about 1.5% to 2%, right? So if you got a 4.5%, it might be as low as 6% for the 30-year mortgage interest rates. But at one point, it went as high as 3%. So when at its peak, I mean, you saw interest rates go up to nearly 8%. And when your interest rates go all the way up, then you start seeing prices get compressed because as your 30-year mortgage interest rates go up, it creates a higher monthly mortgage payment. So in turn, it drives down the affordability and it drives down the prices that folks are willing to pay for the properties. And obviously, this is market dependent, right? But this is a very good macro indicator for you to figure out what's going on in the broader market so that you can assess what's doing to your market locally. Now, let's just take an example, right? If you had a $30,000 home that you bought for cash out of pocket and you spend $40,000 renovating that home, but you're able to make it worth $100,000, then all of a sudden you're able to take a debt service coverage ratio loan, a DSCR loan, and take back out 70% of the value of your home. So you can essentially, if you're able to, with the renovations, make the home worth $100,000, you can get back out $70,000 in the form of loan proceeds, which is the same amount you invested for cash out of pocket. So essentially, you're in a perfect BRRRR situation, right? You're taking back out all the capital that you invested, and now you can rinse and repeat towards the next deal, right? Assuming you can get another property for $20,000 and rent it for $50,000, etc. But that is a much more scalable strategy because it allows you to continuously look for more opportunities to do that. Now, going forward, that's why we have to track the ARV, because if you don't get the ARV correctly, chances are you're leaving money in the deal. Or if you are getting an appraisal back from your lenders or third-party appraiser and it's not the value that you're looking for, then what do you have in terms of data points to challenge that appraisal? Okay. And all these items are going to matter. Okay. So now I'm looking at this property and I just want to see what's happening in the area, in the neighborhood. And I can see that this property looks pretty much renovated, right? I mean, the inside looks great, assuming all the guts work, right? Plumbing, electrical, etc. I mean, this is above average kitchen, above average bathroom, not modern, but above average. And there's not much work to be done. So if this property is being worth $120,000 for a 4-bed, 2-bath, that gives me some idea of what's happening in this area. So before, the example is $100,000, you just got to shift to $120,000, and now you know what the maximum price you want to pay for cash out of pocket and holding costs and your renovation cost to figure out, hey, what is the max I'm willing to spend on a property for me to get back out as much capital as possible, especially you're looking at a 2 or 3 bedroom home with similar square footage that you're looking to convert to a 4 bedroom. Okay. So I'm going to take down these details there. It's a 4 bed, 2 bath. It is 1124 square feet. 1124 square feet. So obviously all these factors still matter, right? 1940, 5227, 1940, 120 grand. Listed today, 130, 25, 5227. No garage, no basement, no HOA. So on a dollar per square foot perspective, this property is going to do 120 grand divided by 1124. So it's roughly a 107 a square foot. Now, what would be the perfect comp? Perfect comp would be if you were able to look at a property right next to it and it had the same square footage, same bed bath count, same finishes, same year bill, blah, blah, blah. That would be a perfect comp. But typically that doesn't happen, right? So as you go across man-made borders such as big Route 11 or natural borders such as these creeks, now you're in different neighborhoods, right? So this is why it's so important for you to figure out, hey, what neighborhood is this property closer to? It looks like this is in West End Manor. So West End Manor. And now I'm able to see what's going on in the market because I saw this property being listed for 120 grand, but it was slightly bigger at 1326. So it was $90 a square foot. Did that property sell yet? Let's see. No, this property still hasn't sold yet. Even though that this property is in worse condition, I would say, right? Because it's got all this clutter in there and these aren't really great photos. Now you can see that this property was listed for on 1124 120 grand. 109 as of 130.25. So now it's at 109. So now you can see what's happening in the market. That property has been on the market since November 2nd, and it's been going down in the same neighborhood. So now this allows me to figure out, hey, if that property finally sells for 109, then I can say, hey, that property unrenovated is worth about $80 a square foot. And if I'm able to max get a ceiling of about 107 a square foot, then now I have a $25 spread between that. But how do I get back out all my capital? I probably have to buy a property if it's a fixer for less than that. So this is why it's important for you to figure out, hey, what's happening in the market, especially in that neighborhood, so that you can have a reference point of what's happening. Okay. Above average kitchen and bathrooms. Not modern, and no painting or flooring work needed based on visual photos. Okay, so now I know a general idea of what's happening in this property. Let me underwrite this property as this, right? So this property is listed for 120 grand. I don't think I need to put that much more work into this property, but let's say I just want to do a few things. I typically replace the toilets with high pressure flush toilets because that's what I have in the properties that I own so that we can avoid any clogged toilet calls. I don't think I need to paint any of this home, but let me just put in $200 of painting in there, at 200 square foot at $3 a square foot for painting, just so I can have something in there in case there's some touch-up work that needs to be done. There is a landscaping in the yard, and there is a roof repair. Oh, 1 second. One thing I want to do is I want to add a cage. Do this. Since my HVAC just got stolen, add cage for HVAC system. And that was $900 each, to be honest with you. So I just recently got an HVAC stolen from our rentals, and I had to replace it. It cost about $5,000, including the cage, and the cage itself is about $900. So I don't want anything to get stolen anymore. So I'm going to automatically add a cage to protect the HVAC system so that people don't just cut out the wire and steal the copper, which is totally ridiculous, but people do it, unfortunately. So that leaves me with a rehab of about $5,200, right? Just so I can put that in place. Then I have to go get my market rents. So if I go to affordablehousing.com and I go to the owner section and I go to the market rent estimator, I'm going to plug in the address to background count. And I can see that on average, for 25 units that are 4 bedrooms, within a 2-mile radius, the average rent is $1,299. So I'll put $1,300 right here for the rent. So let me get my property tax number right from the Redfin calculator, the payment calculator. And obviously, you should double check the property tax number with your county assessor records before you close. So I got $71. And then for my homeowner insurance, I'm going to do 93, which is the estimate right over here. And I'm going to multiply it by 1.2. And that's because I'm adding a 20% premium to the insurance estimate, because insurance companies typically view investment properties as a riskier asset. So they're going to charge more premium. That's why I'm adding a 20% premium by multiplying it by 1.2. Obviously, you should also get an insurance quote before you close so you can finalize your numbers. Then I got, for my other expenses, I'm setting aside 10% of my rents every single month for maintenance. Right? I just told you when the HVAC got stolen, things happen. You know that the roof is going to replace in 10, 15, 20 years. Make sure you are setting aside money every single month for expenses that you expect to incur, right? Don't be like me and just forget about those expenses by accident. Because if you don't, you are underestimating your expenses, because you underestimate your expenses, so you overestimate your profitability. Don't be that person. All right, then I got 10% for my property management, 5% for my vacancy, because the property is always empty at some point. And then if I go 25% down, so I will be putting $30,000 down based on my asking price times my down payment percentage. And I can go probably about 7.5% interest rate right now is probably what we're seeing in the market. That will get you, if you rent this property out as a 4-bedroom and you rent out for $1,300, you would cash flow $160 a month, and that's a 5.2% cash on cash return. So when you bought this property for $120,000 with a $5,300 rehab, 25% down, and a 7.5% interest rate. Okay. Now, the exercise I want all of us to go through is to simply go through, hey, what happens if I lower my asking price, right? What if my target return is 10%? Okay, I would have to buy the same home in the same condition, not for 120, but for $100,000. Because in that scenario, that's how I'm able to cash flow $268 a month. That allows me to reach a 10% return for $100,000, assuming everything else stays constant, with a $5,300 rehab, 25% down, and a 7.5% interest rate. Okay, this all happens, right? Now, again, this is not investment advice. We're not still selling any investments on this call. We're simply showing you the work and how to tactically update a spreadsheet based on information that you get, right? Let's say the interest rates drop down to 6%. Well, now all of a sudden, you might be willing to pay $110,000 because you're still able to get a 10.2% return. Simply because the interest rate dropped 1.5 points, which is why you got to pay attention to what's happening to the Fed, what's happening to the macroeconomics in the market, because all these factors will affect your willingness to pay and what's your profitability. Now, let's say we do one more thing. Let's say the rehab tripled, right? We go to B6 and we multiply that number by 3. So now we have a $16,000 rehab almost. Even though our interest rates dropped 1.5 points in case 7, our cash and cash return right now in E9 just dropped to 7.9. So now, because my rehab tripled, because I maybe opened up a wall and realized the plumbing's all out of whack or the electrical needs to get replaced, now all of a sudden I'm gonna have to go back down to $98,000 to get back to my 10% return. So I just went from 110 to $98,000, assuming $16,000 rehab, 25% down, 6% interest rate. Now I'm at a 10% return, assuming I still rent this property out as a 4-bedroom for $1,300. And now I can cash flow $352. So this is how you can adjust up and downwards the different factors that you have in place to figure out what's a deal for you based on your criteria without getting emotional and staying objective to just the numbers. All right, hopefully this was helpful, everybody. My hope is that you copy my homework today, right? Analyze the same deal and analyze today using the same spreadsheet. You guys want to copy the spreadsheet, just go to affordablehousing.io, not .com, .io. Go to the Get Deal Analysis tool. Plug in your name, email, and phone number. That's the fastest for you to get a copy of the spreadsheet. I didn't make this spreadsheet from scratch. I got it from a few other folks. Combined it, I tweaked it, modified so that I can analyze these deals as fast as possible. All right. Hopefully this was helpful, everybody. My goal is for you to start your own YouTube channel, right? Do the same thing I did, because at some point someone's going to ask you, hey, why do you think this is a deal? And you can say, I know that this is a deal because I've been looking at properties for the past 489 days. Right? That gave you some confidence that you know what you're doing? I certainly hope so. All right. I hope you all have an amazing Thursday. Spend some quality time with your family and friends today, because that's what life is all about. I'll see you all tomorrow for day 490. Have a good one, everybody.